being able to have time freedom is, it's kind of the idea. If you're a farmer, years and years ago, or even if you don't plant, you don't eat, right? So you got to make sure that you have things set up. So it's very similar to what I'm doing now, is how can I continually grow and help more people, create more resources.
There is a new American dream. One that doesn't involve working till you're 65 before you start enjoying life. If you're someone looking for ways to regain control over your time and check off that bucket list now, you're in the right place. We share tips from experts on investing, personal finance, and mindset so that you can finally have the freedom to work less and live more. This is the Freedom Investing Podcast with your host, Chris Toribio.
What's going on, everyone? This is Chris Toribio with the Freedom Investing Podcast, and I'm so happy you're here to join us for another amazing episode. If this is your first time tuning in, welcome to the show. Please make sure to hit that subscribe button so you can stay up to date with our latest episodes. Moving on to today's guest, we have Bronson Hill. Bronson is the founder and CEO of Bronson Equity and has raised over $20 million for real estate investment. He is a general partner in over $150 million worth of real estate around the United States. Bronson is an authority on apartment investing and is continually putting out new content to help educate investors and help them achieve financial freedom. He spent his earlier years as a sales consultant for several large and startup medical device companies. Bronson, welcome to the show, man. Before we dive into it, give us a quick 2-minute rundown of who you are, your background, and where you are in your journey to achieving time freedom.
Sure. Hey, Chris, I'm really excited to be here today. I love talking about freedom, financial freedom, which really begins with time freedom, right? Having freedom over your time. And that's really my story. I was a well-paid medical sales professional going into surgery with doctors and heart surgery, actually, and making over $200,000 a year. And I was able to do it in 20 to 30 hours a week. And people said, "You're crazy. Why would you want to leave this?" And I said, "I want to have more control over my time. I want to be able to create. I want to be able to really make an impact in a way where I can help others to experience financial freedom." So I got involved in multifamily investing. I learned about something called syndication, which is just a fancy word for raising money and pooling it together to buy apartment buildings or other assets. And since then, we've actually raised, it's about 30 million now. And we're just having a great time. And it's been about a year and a half since I left my W-2 job, and I haven't had one regret. So I've been so happy that I did it.
Wow, that's amazing, man. And as someone who also works in the medical field as a nurse anesthetist, I always see you guys in the ORs chatting up with the surgeons, making sure that the surgery goes smoothly. So hats off to you. But I also understood that the level of time flexibility you needed to have in order to sustain that job was really big, right? There's a lot of requirements in terms of callbacks and making sure you have to go to all of these different sites. So I'm sure that was a big relief being able to step back from that.
Yeah. And it's really interesting in the medical field. I'm sure you experience this too, Chris. It's just that, a lot of people, we don't take any time off in the medical field. It's like you may take a week here, a week there. Actually, there was a study that came out that said the average American, not just medical, but the average American takes 13 days off a year, including sick time. And we work more than any other nation in the world. In Italy, the average is actually 42 work days is the average, which is like 8.5 weeks, work weeks a year. So it's just something we really kind of, live to work rather than work to live. And so I think there's something that comes from having free days where you're not thinking about work, where you're traveling. I've done 6 international trips this year in 2022, and just really love being able to, I'm writing a book right now. I'm doing things that I really have been passionate about for a long time.
That's amazing, man. And so let's step back to the early beginnings, right? So you were working as a medical device professional, working in the operating room, making over $200,000, just working 20 to 30 hours a week. I mean, did you kind of just jump into that role and was automatically kind of generating that type of income and that time flexibility? Or how did it kind of start before that?
Are you talking about in the medical field, how it worked to get there? Yeah. So I'd been doing it. I did it for about 10 years. And the last 2 or 3 years, I intentionally scaled back. So I was doing, 40, 50 hours a week. And then I started to scale back because I really wanted to. I'd started doing some real estate in single family, which a lot of people think single family leads to financial freedom, which it can. It usually takes a very long period of time. And when you get into using, other people's money, or OPM, as we say, that's really the way that you scale. That's how I was able to 20x my net worth. I was able to cover my living expenses through passive or investment income. And so, but yeah, I think, it started basically just from a conversation I had. I had a conversation with my cousin, and he basically has been doing multifamily for a long time. And I said, hey, here's my plan, is to buy 30 houses in the Cleveland area and just get passive cash flow and retire from my job. And he said, well, that sounds like a lot of work. Why don't you consider multifamily? And I said, well, I don't have the money. He said, you can raise the money. So that led me down a path to read every book I could on the topic. I started a meetup. I know you have a meetup as well, Chris. Started a meetup, but the first meetup, I met my first investor. Got coffee with him. He said, hey, I'd invest 100K in one of your deals. I'm thinking, like, I don't have any deals, but I introduced him to another guy who was at that same meetup who had a deal. And now I went from having, no deals to being a general partner on a large multifamily deal. Even though it was only $100,000 I raised, it got me some experience. And that's the hardest part of this whole business, is just getting started. And so once I had my start, I was able to eventually, 6 months later, develop a partnership. Together, we raised $15 million over the next 18 months. So it's single family is really much more of a individual thing. You're kind of doing it yourself, maybe with your property manager, you have an agent or something. But with multifamily or larger deals, it's a team thing. So you have, I had, my inexperience in that space didn't matter because my partner had over 10 years of experience doing it. So I think for me, the driver was I wanted to get to where I could cover my living expenses through passive income. That they call that kind of the rat race number, right? You can cover, so you can leave your job if you want to. And so when I was able to do that, it really felt very freeing.
Bronson, that's fantastic. And I want to take a step back there and really highlight the two things that you did, right? The first thing that you did was really focusing on getting yourself in a position of financial strength, really setting the foundation so that way the living expenses were covered from the investments that you were making. But also when it came time to scale up, you found someone who had the experience in this space that you can ride the tailwinds and really jumpstart your success, right? So when it came to the single family investing that you were doing, I guess what was your experience like in there, and what kind of prompted you to say, look, I think I want to go jump into bigger deals?
Yeah, so I had become a accidental landlord back in 2006, and I had a house for over 10 years, and it cash flowed. I mean, I got $300 or $400 a month. Generally, sometimes there were expenses that would eat into that, and it appreciated over time. And so I just thought what most people think is that I want to become free financially, through single family, and that's what we think because we live in a house. We're very familiar with houses. Anything else kind of feels kind of foreign. And so I'd say about 95% of people just say, well, I got to buy more houses. I got to buy a bunch of rental houses. So I did. I basically, with a family member, started buying single family houses. We had a small portfolio of 4 or 5 houses. And, there was some cash flow, but it penciled great on paper. But these were not the nicest part of Cleveland. And so you can imagine, the tenant base, you laugh because, it's true. You think, oh, this is going to be amazing. We get all this cash flow. And then you actually do it and you're like, all this stuff comes up. And it was honestly just a lot of headaches. And I realized, like, I don't know if I could or if I would want to scale up to 30 houses. And even then, it basically would become kind of a part-time or full-time job. And so when my cousin, who, again, was more of a cousin I just hadn't seen in years, and he said, why don't you consider doing multifamily? And my objection was, I don't have the money, right? And so, like a lot of us, we say we don't have the money, but it doesn't matter if you have the money or not. So you can have other people. Even Robert Kiyosaki, who wrote Rich Dad Poor Dad, he says it's selfish to do deals all by yourself. Like if it's only your money, that's selfish, right? Because you're not including other people in that. And there's a lot of people I've discovered in raising $30 million the last 4 years that have a money problem. And the money problem is not that I don't have money, it's that I have money and I don't know what to do with it, right? So if I can create a way for people to passively invest and they can get the same or better returns than if they were to do it themselves, it's very attractive. Because if I'm a physician, I'm a business owner, I don't want to be getting calls in the middle of the night or even from the property manager, hey, what do I do on this? And I always tell people, if you can't 10x what you're doing right now in your investment strategy, then you're not really a passive investor. So people that say that single family is passive, I would say it's not passive. I'm not saying people shouldn't do it. I'm not saying there's not money to maybe in flips. There's not ways to do it, but it can begin to feel like a job. And so when people can really understand, they can analyze a deal, they can vet a team, they can get into whether it's multifamily or we have ATM machine funds, we have other types of funds that we do, and there's also other things out there, then you can really learn how to scale your wealth effectively over time without taking up more of your time. And so that to me was really appealing. And then of course, for me personally, it allowed me to scale up without having the money, right? I could basically bring people in. And so that's how I was able to 20x my net worth by creating enough value for other people to get there.
Absolutely. I love that mindset. And to that note on Robert Kiyosaki, he always says, people can either say I can't afford it, or people can start to ask, how can I afford it?
Yeah.
And that's really breaking through that limiting belief, right? And that like if you don't have the funds, but there's something that you want to achieve, sometimes it's a matter of just being open to bringing someone else on board that has that synergistic relationship, so that way both of you guys can, benefit from that execution there.
Yeah,
That's
absolutely.
great.
Yeah.
And so moving forward from here, what did your first jump into the commercial real estate space kind of look like for you, having been a landlord, having that experience, and now jumping into this thing that really you treat like a business more so than you do a landlord, right? How was this like?
Yeah, yeah, it's interesting when you buy a single family house. You owe $500,000 on it. If something happens with the property, at least from the bank's perspective, it's your responsibility, right? Like you're kind of on the hook. But if you owe $30 million, which we do on a couple of properties, if there's an issue with the property, it's the bank's issue, right? So they treat it very differently. So you're kind of the second factor when you get a house. You're kind of the first factor in qualifying for the loan. When you're getting multifamily apartment, they do look at you, they look at your team, they look at your experience, but really, it comes down to, it is a business, right? It's a business that functions, that operates. I'm a huge fan of the multifamily space just because it's so efficient. If I have 100 single family houses in one market, if I have a repair guy, he's got to go, from, the wherever he's at this office to the house. And then he's got to go to Home Depot, get the part. Then he's got to come back. It's a half day or maybe a full day thing just to go to one or two houses, versus if you have 100 apartment units in one place, then it's very efficient, right? We have a full-time property manager. We typically have a leasing agent. We've got one or two full-time maintenance people, and they have typically most of the same appliances, the same paint colors. It's all there. It's much, much more efficient. And so that's why, large people, people that are high net worth over 10 million, they did a study of what do they, where do they invest their money? And the highest percentage, 26%, was in commercial real estate, because they realized they could own it without having to actually be the ones who are actually running it, right? So again, it comes down to scalability. And that's what a lot of people, I think, and maybe a lot of listeners too, are thinking that, well, I'm going to do this and I'm going to, feel like they have to do stuff in single family before they can go to multifamily. But I think, for me, I'm glad I learned it when I learned it. There's this saying, when the student is ready, the teacher appears, right? So I learned as, I kind of, okay, this mentor came around, I was like, oh, this is it. And then I learned it, but it really allowed me to scale. And so I think what you said too is not asking, saying I can't do it, is how can I do it? And that's why I think that the learning about syndication, even the learning about internet marketing and having a list, and, even like you guys do, communicate and do events, it's super, super valuable, because you're creating value in the space and people get paid in the marketplace for adding value, right? So if I can just help, I think Zig Ziglar has that quote: if I can help enough other people get what they want, I can have anything I want, right? But I have to get that order right. I've got to help people get what they want or they need, and then I'll get everything that I need, right?
I love that. And that definitely makes sense when it comes to trying to impact not only yourself, but impact the community around you. If you are being willing to kind of provide value to other people, a lot of people take notice and say, like, how can I get in on that? And they start having this feeling of fear of missing out is something that we talk about a lot nowadays, that FOMO, especially when you see either deals closing or people selling these assets. And the next thing comes around is, where's the next opportunity that I can park my funds in? Because right now, as we both know, the stock market isn't doing too hot. And if there's an alternative asset that I can park my money in that stays safe from that, that'll be beneficial to my portfolio over the long term.
Yeah, absolutely. I used to be an investment advisor kind of on the side. I have had different, trials into financial freedom of how to get there. And I wasn't super successful as a financial advisor, because I kind of saw, it's almost that Wizard of Oz moment where you see the guy behind the curtain and there's pay no attention to the man behind the curtain. But Tony Robbins had a book and it came out and said that the average mutual fund, their fees are about 1.5%, but there's all these hidden fees. So it's actually about 3.25%. And then also on top of that, if you have a money person, such as a financial advisor, they're typically taking 1 to 2% on top of that. So that's, 4.25 to like 5 point, I don't know, got to do my math, 5.25%. It's a lot of money, and the returns typically are only 7 to 9% per year in the stock market. So I'm a huge fan of getting people out of Wall Street and into Main Street. And I always ask people, well, why are people so comfortable with stocks and bonds? It's because Wall Street spends billions of dollars a year to educate individuals about stock and bond investing, and they call it a safe traditional asset, right? But if stocks can crash by 50% in a 12-month period, which has happened multiple times over the last 100 years, is it really safe? I mean, that really hasn't happened in large multifamily ever. It hasn't happened in other assets, but yet we call these, paper assets that are just, oh, you want a share of this, you want a share of that. I'm not anti-stock. I just think that we should have most of our money in more real assets that are more Main Street assets as preferred to Wall Street assets. Because if, no matter what happens, Wall Street finds a way to get paid. If you lose half your money, they're still getting their pay. They're not real. There's not an alignment of interest. To me, with my investors, I'm heavily invested in these deals as well. If the deal doesn't perform, I suffer. And also the performance, if the deal performs, then I get paid really well, as well as the investors get paid well. So there's an alignment of interest there. Wall Street, unless you're like in a hedge fund, there's very little alignment of interest. And so anyway, I just think it's important to point out, because a lot of people don't really understand that there are other options besides stocks and bonds.
Absolutely. And as you said, in terms of alignment of interest, I mean, oftentimes you're parking your own funds into that deal, and you're trading your time and a lot of your efforts into making sure that the business plan is executed appropriately. And the thing is unlike many other financial advisors that you were saying that charges a fee based on the percentage of your portfolio, as a general partner in a syndication, you often don't get paid until the investors get paid out first. And so that's another thing to ensure that that alignment of interest is there, which is great.
Yeah, 100%.
We actually had a former financial advisor on our show a couple of weeks ago. His name's Chris Miles, and he saw the same thing as you did, where it came to a point where he realized that the people and his colleagues that were giving people this advice on how to manage how to manage their money, how to manage their retirement, oftentimes were unable to do so themselves. Were unable to retire early, were unable to generate $1 million net worth or whatever that may be. So they were often preaching, but unable to kind of execute that themselves. And that's when he really realized, like, I can't in good faith advise someone if what I'm advising people to do hasn't really been working for many people. So that was a pretty eye-opening experience for him.
It's crazy. I mean, I was recruited for a while by other financial firms. They're like, oh yeah, the top, people in our industry, they make, as an advisor, you can make 1.2 million a year. This was several years ago. And, I just thought, man, I just couldn't clear conscious do it. I mean, there are some great financial advisors I know that look at alternative assets and other things, but the challenge is for a lot of them, they don't make money unless you do transactions or buy their products. And that's like going to a used car person and say, hey, should I buy a car? It's like, well, yeah, of course. You look great in this Buick over here, whatever it is, like, it's just, they're trying to get you into something because that's their incentive. Right. And we all have incentives, we're incentivized by our businesses, but it's crazy to me how Wall Street is, trillions and trillions of dollars that people just trust someone that they did a study and they found that over 50% of people managing over $100 million had $0 invested in the funds they were managing. So it was like 51% of managers that were managing these $100 million or $1 billion funds had $0 in the fund. And you talk about alignment of interest. I mean, we usually put 5 to 10% of the money that we raise. We usually put that from our general partner team in the deal. We're leveraging our time. There's a lot of combined things there. But I don't know. It's just stuff that the more you look at alternatives, the more you see, man, there's a reason why they call it real estate or they call it real assets, right? It's actually something physical. It's tangible. It's real. A lot of stuff that we invest in, it can be hard to understand. And then if things don't go well, there's a lot of volatility there.
Absolutely. And on that note about alignment of interest, again, these financial advisors, oftentimes they're going to get paid to manage a certain percentage of your portfolio. And that's irregardless of the performance of that. So even if the market continues to go down, if your money is parked in whatever fund that they're managing, they're still taking off the 1 to 2% off the top. So in terms of playing catch up when the market recovers, I mean, it's pretty sad, but a lot of times people don't really see that much growth over the span of their investment career because of these fees that add up over time.
Yeah. Yeah. So basically, this is an interesting story. I had a friend of mine was an investment advisor, and we went to go catch up, and I didn't, more of an acquaintance, but we went and got some lunch a couple months ago, and we were talking, and now he actually recruits other investment advisors. He's for a big firm and stuff. And I kind of like, as we were talking, I tried not to get irritated or upset, but I started getting more and more irritated because I kind of realized, like, he's basically his whole justification for what he's doing is like, well, we're helping people save, we're giving them a plan. And I'm thinking, like, well, can't people just save on their own? And why do they need to pay all these fees to save? Like, why do they need, if I just make a decision that, hey, I'm just going to save money, I mean, do I really need to pay someone to really help me, to put money in it basically effectively becomes a bank account. And today with inflation, inflation could be 7 or 9%. I think it's closer to 15% or higher. If you look at there's a website called Shadow Stats that talks about actual inflation, not just the CPI. But if inflation is higher, then just by putting money in a bank or just kind of letting it sit there, you're losing like 15% of your money per year, right? So, there's a huge cost to just saving. And so there's the saying that savers are losers. And it doesn't mean they're not people with bright prospects. It just means they're losing money. And so with this guy, I had a hard time, I mean, we settled, it was fine, but it was just kind of realized that we're just totally not in the same place anymore, or that at least I'm not in the same place anymore. And I'm very passionate about, helping people understand that outside of Wall Street is a much, much better way to become financially free. A lot of people, there was actually another case. I just want to share the story real quick. There was another guy that invested in one of our ATM machine funds. We partner with the fifth largest operator of ATMs in the country. And this guy had some financial advisor that had all these, credentials and CFP and all these different, financial planner, all these different things. And he just my friend or this guy invested forwarded me the email, and it just said like, I highly strongly recommend that you don't do this and this and that. Whatever. And I was thinking like, look at what his plan is. It's like either this guy who's a financial advisor is not wealthy, or he did not become wealthy through doing these strategies, right? People don't become wealthy by just simply being super safe and conservative. If you don't have money, I think taking some more risk, just in the sense of like knowing that you're not going to just barely having savings account, you're actually going to have income coming in through real assets, is incredibly powerful.
Absolutely. And so for someone who is not very well versed when it comes to investing in alternative assets, such as real estate, such as ATM funds, I guess, what are some of the benefits of passively investing into these type of deals as opposed to either parking in the stock market, which, as we know, is subject to that level of volatility, those fees, but also even relative to being a single family landlord, as you had mentioned earlier?
Yeah, so I think the big thing to say is, do you have time or do you have money? For me, I didn't really have either, but I just made the time, right? I had a job, so I'm gonna dial back at the job, and I'm gonna, I didn't have money to invest. But people that, so if you don't have money, you can learn about how can I raise money or be involved in some of these deals, or maybe find deals or different ways to do it. But if you have money and you're saying, hey, I've got a nest egg and I've got a retirement, or I've got a certain amount, I'm trying to figure out how to retire from my business or from my well-paid job. Getting things that really, again, allow you to scale your wealth without taking more of your time is incredibly powerful. So I keep talking about that, but I'll just give an example of multifamily investing. So multifamily, you mentioned it, is less volatile. Rents and inflation go hand in hand. There's this chart from Mother Jones that shows from the 1960s to now that rents have just steadily gone up like this, and inflation is just a trend line that's almost exactly, it lags just slightly, but it's almost, rents lag slightly for inflation, but it's almost a complete trend line. So basically knowing you have an asset that's going to be worth more in 5 years, in 10 years, and whatever, it's a great, rents are a great inflation hedge. There's also some incredible tax benefits, right? So if I can invest and I can pay little or no taxes on the investments, that I make, and the money that I make from it, if I can defer or completely eliminate taxes, that's huge, right? Because a lot of people are high earners; they're paying 30 to 50% in taxes. I actually went personally from paying a 25% tax bracket to almost about a 1% tax bracket by becoming what's called a real estate professional and using all of this depreciation that's generated from these passive deals. A lot of our investors are really interested in reducing taxes. So that's a big benefit. And then again, owning an asset that we use debt to buy. So again, it's like buying real estate in general, right? You buy a house, you put 20% down, whatever. If it appreciates by 20%, your investment hasn't increased by 20%, it's increased by 100% because of the leverage. So you have a leveraged investment that we know, especially in a time of high inflation. This is how someone really takes advantage of inflation, right? It doesn't just simply hit you at the pump, doesn't just simply hit you at the grocery store. It's like, no, I'm actually using this to my advantage because I know that inflation is here to stay. And I think that's something that people can count on. So not only do I get to take out debt to buy assets that'll be worth more in the future, I get to pay these off as an investor with future dollars that are worth less, right? So it's not only that I know it's going to appreciate, I know that I get to pay it off with so it's like a double positive, right? So I think for investors that are new, getting into these type of assets that don't take up more of your time, that help you to reduce taxes, that help you to use leverage and, obviously have an inflation hedge. And then, using leverage as well with that inflation hedge, you get to actually pay less in the future for the privilege of owning today. So it's really an amazing, I almost call it like an unfair asset class, right? The fact you can do all these things in one asset.
Absolutely. And I really want to take a step back and really emphasize one thing that you said there with regards to the tax benefits, right? I mean, you went from paying double digit tax, somewhere in the 20, 30%, whatever that may be, down to paying just 1% in taxes because of the fact you qualified as a real estate professional. And so for many busy professionals out there that maybe have a stay at home spouse or are in the real estate space, but don't necessarily realize that they can qualify as a real estate professional, these are really important tax benefits that you can do to take against your income and allow yourself to really enjoy the cash flow and the liquidity now as opposed to parking it in a 401k to defer those taxes down the road, right? Because the thing is, a lot of people say, well, oh, I want to decrease my tax liability, so I'm going to park it into a retirement fund like a 401k so that way I can decrease my tax liability now. But the realization is that down the line, you're still going to have to pay taxes on it. It's just going to be later down the road, right? Versus now, at least if you can take advantage of these deductions, such as real estate depreciation or all of your business expenses associated with your business, it'll really allow you to keep more of that and enjoy that now, which is huge.
Yeah, it's it. I mean, it's some of the taxes, they are completely eliminated and some are deferred. But again, if I have a choice of paying taxes now or in 5 years when we sell a deal, I'd much rather pay in 5 years because I can take maybe the 25K or whatever I would have paid now, and I can invest that, and maybe I can double it over the next 5 years, right? And then, but the nice thing with their tax system is you can just continually defer, and a lot of people call them loopholes, but really the government has them as incentives, right? Because they need to provide affordable housing for people. So that's what we do, right? We provide housing for working class folks. There's also in the energy space, there's stuff in oil and gas and other things where there's incredible benefits, sometimes even against ordinary income, which is really awesome. So there's some really creative stuff out there that a lot of people have no idea. A lot of people are just paying the high taxes thinking there's no way around it. And there are ways around it. There's a lot of tax strategy firms that kind of assist with this as well.
That's fantastic. So, earlier on in this conversation, you had mentioned that when you were working as a medical device representative, you were working 20 to 30 hours a week, making over $200,000 a year. At this point in time, what does your hours look like in a day? I guess how has your lifestyle changed between then and now?
Yeah, so I'd love to say I'm at the beach every day. I live in Southern California. I've got my feet up, just sipping a Mai Tai, but I'm definitely working harder than I was before. I mean, of course, when I was doing the 20, 30 hours, I was doing the real estate on the side, but I'm probably working maybe 40, 50 hours a week. But I think the difference really is I can do it how I want to do it. I can do it on my schedule. I just got back last week from Patagonia for a hiking trip for 10 days. On the plane, I'm working on a book. So I'm outlining my book on the plane. And then when I get there, I'm just kind of, fully, free day and just not really thinking about work and everything, which is awesome. So I think, being able to have location freedom and being able to have time freedom is, it's kind of the idea. If you're a farmer, years and years ago, or even if you don't plant, you don't eat, right? So you got to make sure that you have things set up. So it's very similar to what I'm doing now is how can I continually grow and help more people, create more resources, continue to invest my own money more, and really create something that really works well for people. So I think, it really starts with, and I actually did this with a whiteboard. I'm a big whiteboard guy and idea guy, is get a whiteboard and just, for each listener saying, what is the ideal week look like for you? Like how many days off does that mean? What time do you get up? When do you work out? What are the things that you really want to do? And so for me, it really, looked at what were the biggest changes were more travel, more kind of creative time. I love creating, whether it's books or I'm also a songwriter, the things that I can create it's really fun for me. And then also creating memories for family members, spending time with family, spending time with my daughter, doing travel with her, and just, trying to find things that really create awesome memories. I've never really been a stuff guy. I mean, I have some stuff that's nice, but I'm not I don't need a lot of nice stuff. I love having experiences and adventures and also getting a chance to be able to create. So I think what it does, money really amplifies people. So if you just, again, had freedom over time, what would you do? And if it's just, hey, I just sit at home and watch TV, or I just travel, for years and years, that's not really, I wouldn't say it's wrong. I just say it's not really a strong answer. A strong answer is, this is the purpose. This is the reason why. This is what I want to do. This is the whole reason this will allow me to make a bigger impact in the world. That's something that's huge. So that's something that I think I encourage people to really get a hold of purpose, why you're here first. And then once you get a hold of that, you can figure out what you want your life to look like.
Ooh, I love that. I love that. I've spoken with a couple of friends who known people who have made these major exits in companies or through other real estate assets and things of that sort. And you're absolutely right. It's not like when they're done with this, all they're going to do is just sit on the beach, sipping Mai Tais or traveling the world for 2-3 years at a time. And don't get me wrong, some people do because that's what they've identified as what their purpose is having those type of experiences. But for the grand majority of people, if you think about it, if you have been able to achieve that level of success, whether that be growing a successful business and exiting it at a much higher multiple, or doing the same thing with some sort of tangible asset such as real estate, chances are you're the type of person who has a strong purpose and a strong will to work towards that purpose and provide value and make some sort of impact on the lives of other people. So I love the fact that you had mentioned that you really have to sit down and take inventory of what you feel your purpose is, and then really kind of planning out your life around that first. That's huge.
Yeah, yeah, and I think that's the whole thing. Is there's a verse in the Bible that says, "Without vision, people perish," and that's why most people, something like I think it's like 60 or 70% of people hate their jobs, or most people they go through life and they don't have any sense. I mean, that's the reason why we have so much depression. I'm not saying every case of depression is that, but if I have incredible purpose and I feel like everything I do matters, and I get up and I have a focus and I have a sense of I'm really trying to go after something bigger than myself. It's pretty hard to be stuck in depression when you feel that sense of drive and urgency, right? So it's something that I try to continually. I actually read my goals, my values, my mission every single morning, because that's really the fuel for me that gets me going and says, "Hey, this is why I'm here." Right. So having more time to do that, it's I do take time for myself, and I do take time away, and I do take time to do things, but it's really awesome to be able to make an impact on the lives of people, and that's what I'm most passionate about.
I love that. All right, folks. Well, we're coming towards the end of today's show, but before we finish, it is time for the Freedom Five. These are 5 questions that we ask every guest on our show, starting with the most important question. And this is for you, especially on that note. What is your why? What is the underlying motivation behind everything it is that you do?
Yeah. So my why, I've got a couple. One is my daughter, to be a great dad for her. And then I heard a story about a girl that was stuck in human trafficking that was rescued in Greece. And when she was rescued by someone who was working in this cause, she said, just with tears in her eyes, "Why didn't you come sooner?" And it just really broke my heart to the core, and saying, like, I've got a daughter and there's nothing I wouldn't do. Almost like the movie Taken. I'd go anywhere and do anything to try to find her. But this girl, nobody knew she was out there. And there's actually 20 to 40 million human slaves today. It's just unfathomable, but it's true. So to me, that's really my big why. Is that's what I want to give my life to, and all of the resources I can create, all the money, all the interest is just really to help try to end that evil in the world.
Love that. That's very powerful. Second question we have here. What book, apart from Rich Dad Poor Dad, has had the largest influence on your life?
I love the disclaimer there. Yeah, it's Rich Dad Poor Dad. No, okay. No, I think there's a lot of books. I read a ton of books. This year I've read 77 books, and I read a lot of books.
Wow.
There are many books that have impacted me. One really good book that I think everybody should read, I actually try to read it every year, is called Never Split the Difference. It's by a former FBI negotiator named Chris Voss, and he just gets into everything's a negotiation. When you talk with your spouse, when you cross the street, when anything you do in life, there's always this negotiation that takes place. And so it's an excellent, excellent book. I recommend.
Love that. Number 3, what is the most impactful thing, whether it's a piece of technology, a habit, or a person, that has helped in freeing up your time?
So I think the number one thing that I've done is to really go to personal development events, to go to goals events. Like I talked about my practice, I have this morning routine where I get up and I basically read, my goals every morning, my goals for the year. I've got about 10 big goals. I've got my values, my mission statement, what's my intention for the day. And then I do a gratitude practice where I just write, here's 3 or 4 things that I'm grateful for. And then at the end of the day, I basically, talk about what wins happened today. What are the wins, the positive things that happen? And what am I looking forward to having wins tomorrow? So these things of just, visualization, they might take me, 10 minutes a day, but they're incredibly valuable, because a lot of times if we can't visualize it and make it real, it won't happen, right? So just that practice of creating, speaking it out, writing it down, having a way, I'm going to take a couple days between Christmas and New Year's this year and just kind of get away and just say, well, what do I want to create for next year? What are the things that I want to really see happen? And I think the more you do that, the more you keep those in front of you, the more they begin to happen. And it's been almost magical how that happens.
I love that. Yeah, my wife and I are currently doing our goal setting for next year in 2023. And as of the recording of this episode, it's December 2022. So we are preparing for setting our goals for the following year. I'm kind of curious, I guess, how do you typically structure your goal setting? Is it annually? Is it semi-annually? What does that kind of look like for you?
So I'm a big annual guy. I try to do like a quarterly retreat where I go away for a couple nights, just to the mountains or go away somewhere. But usually like about this time of year, end of the year, I get really reflective and I just try to think about, okay, what happened? And some goals, I achieved and beyond. And other ones I'm like, I didn't quite get it here. I wasn't even close. And so I've got to really think and just look at, what do I want to do? But I really like, the annual side. A lot of people are really in a quarterly, which I think it is good also to have quarterly goals of like, what do I want to experience in 3 months? But just as a personal and business, person, I was like, okay, these are the things that I want to see in my life in 12 months, right? This is what my life looks like, right? And if you continually speak those things, even if they're lofty, huge goals, you can get there.
That's awesome. And then you incorporate that into your daily routine in the morning and then the evening and make sure you constantly remind yourself of that every day.
Yeah, exactly.
That's awesome. All right, fourth question we have here. What is your number one piece of advice you would give to anyone else looking to achieve more control over their time?
So I would say, anybody, and I love that you separated it with time freedom or, that more control of your time, is that the biggest thing you can do is start to educate yourself. Brian Tracy has a quote. He says, if you want to earn more, you have to learn more. And if you can have more time freedom, you have to have more money freedom. A lot of times before you can have time freedom. So a lot of people have kids and they've got bills and they've got a place they got to live. So they got to figure out how can they make more money without taking up more time. So the biggest investment really you can make, and I work in investing, is really in your own education. So if I can educate myself, I can learn and get around other people. I'm a huge fan of going to meetups and conferences. I know you guys do a conference, you do a meetup in your area. And I highly recommend anybody who checks that out. We have one in Los Angeles on multifamily investing. And so just really getting around other people that are doing what it is you want to do. There's this quote that says you're the average of the 5 people you spend the most time with, right? So I can look almost every area of my life. If I want to improve my spirituality, if I want to lose weight, if I want to become more help work on my wealth, all these things, if I can just get around people that are at that next level, it will dramatically change the way my life goes. So I think that's probably the biggest thing is just, really, trying to get around people that are more successful, that are there, that are doing it, and just start asking questions and be a learner.
I love that. Yeah. Oh, never stop learning is the number one thing there, is because, even if you are a professional and an expert in the field that you're currently in, there's always something else that can enrich your life that you are a complete novice in that you can learn from other people. So just getting around the type of people that you want to be, or the type of people that would help to elevate you to get to where you want to be is definitely crucial. Love that. Yeah. All right, Bronson, fifth and final question we have here. What is the best way for our listeners to get in contact with you?
So we've been talking a lot about, inflation, investing, just different strategies there. I've got this free resource I put together. It's how to use inflation to your advantage. It's a 50-page ebook that's color pages and all kinds of things. You can get that on my website for free at bronsonequity.com. And that's the best way to get in touch. We also have information about our investment club where we're doing deals. And so we have people that join us passively, whether it's our multifamily or ATM machine fund or other alternative assets. But this has been great. I really appreciate you having me today, Chris. It's been a lot of fun.
Absolutely, Bronson. Well, tons of really great information today. I really like how you transitioned from a medical device representative into jumping into real estate, both as a single family landlord and then jumping into the commercial multifamily real estate space. I liked how you talked about the mindset shift that you had when it came to determining whether or not an active or a passive role for some other people would be more helpful for their portfolio. And also that quick stint that you had as a financial advisor and the realization that you had when it came to giving people advice on those assets versus alternative assets that can help grow their wealth over time. I just want to thank you again for being a fantastic guest on our show, and I really look forward to remaining in touch.
Thanks, Chris. Appreciate it. Thanks.
Now, if you like this show and want to learn more about how we can help you free up your time through passive real estate investments, check out www.freedominvesting.com. Make sure to subscribe to our monthly newsletter and schedule an introductory call with our team. We also have a free 7-day course on what passive real estate investing is and how to get started so that you can start your journey towards earning back more time in your life. To all of our amazing listeners here on the Freedom Investing Podcast, my name is Chris Toribio. Till next time.